Building wealth from home ownership. That's our topic for this morning's Backstage Pass. Good morning, I'm James Lopez, president at HomeFi Corporation. CoreLogic released their home price index today. This was data for the month of April, all right, so we're a couple of months behind. But it showed that in the month of April, home prices increased by 2.6% month over month and by 20.9% year over year from the previous year, from 2021. And also the data also suggested, and they believe, that over 70% of the homes that sold during the springtime this year were sold over asking price. That's pretty huge. Now, CoreLogic has been missing their forecasts, all right? So when you go back and look at their forecast for April, they had only forecasted a 1.2% increase. Data came back at 2.6%. Last year, when they forecasted for this year for April, they had forecasted at 4%. Today's report came out and showed almost 21%. They've been kind of missing the mark on some of their forecasts. Now, for May, right now they're forecasting 1.2% in May and 5.6% in the year going forward. So May 2023, they've forecasted that we'll see a 5.6% appreciation. So let's assume that they're correct and 5% appreciation is what we see for May next year. If somebody buys a $400,000 house, that's $20,000 in appreciation. $20,000 in just 1 year. Now let's say that they put 10% down, which is $40,000. Then that means that their realized return on that 10% down investment is 50% because of the leverage they have. That's huge. Home ownership builds wealth. Now look, everybody knows and we understand too, home prices are higher, interest rates have been going up. Obviously, it's more difficult to find homes because inventory is low. But on the flip side of that, look, rents are going up and increasing as well, and it's equally difficult to find a place to rent as well. So we need to be educating our customers and our home buyers. If you're in the industry, if you're a real estate agent or a mortgage, educate your customers that come to you and just say, look, there are benefits to home buying, and if you thought about buying last year but didn't want to because you were worried about homes being too expensive, you missed out on 20% appreciation. That's pretty massive. Don't miss out on the 5% coming in the next year that's been forecasted. So educate your home buyers, and then if people are discouraged or worried about the rising interest rate market, look, we've got Lock and Shop that we talked about yesterday. If you missed the video from yesterday, go back and watch that. One quick correction on that, by the way, I said we can lock for 120 days. We can actually lock for 6 months, 180 days. So people can lock and shop for 180 days while they're looking for that perfect home. And if they miss out on one contract and miss out on another one, their interest rate is still locked, protecting them from a rising rate environment. So again, be sure to educate your customers and let them know, hey, this is what's going on, this is what's being forecasted, and this is what you can get. Whenever you purchase a home, you get amortization, right? So you're paying down that loan, right? You get appreciation, that's good, that 5% appreciation, and your payments are fixed, right? Rents increase. Typically, most leases include a certain percentage increase in rent year over year. When you own a home, your rent's not going up, all right? Your mortgage payment's not going up. So educate your buyers. A couple quick notes on the largest, the metro areas that saw the largest gains. We've got Phoenix at 30%, San Diego at 26%, and Las Vegas at 27%. Now onto the bond market and what's going on with mortgage rates today. As of right now, mortgage bonds are up 23 basis points. So we're covering up some of those losses that we saw yesterday. The 10-year yield is down 6 basis points right now. So again, just kind of making up those losses. And the bonds are trading in a pretty wide range right now. So we're still going to call this, what we're looking at from yesterday to today, some sideways trading and kind of on that stock market seesaw like we talked about. What that means for mortgage rates today is that interest rates are going to open up probably a little better, and then there could be some repricing for the better. Just it depends on how the day goes, but we'll be watching that and let you know. That's all the news that we have for today. Looking forward to the CPI report that's coming out on Friday. That's going to be a pretty important report, and we'll see how the markets react to that report. But until then, listen, remember, stay positive. Hope you have a great day, and we'll see you tomorrow.